Welcome back today to the channel where we're going to be discussing gold, real estate, philosophy. What is gold? Why don't you own it? What are its long-term ramifications? Historically, where is it mentioned? And kind of the big dilemma that is holding you back right now. What I call the great tug of war in finance. So let's hop in. Let's look at some charts. Let's see what's going on. And then hopefully you can start looking at it in a different light. Let's jump in. So here we have two charts today. And I remember a mentor of mine back in the day in the '08, kind of '09, issue we had with mortgages and mortgage-backed securities and everybody buying houses and banks giving loans and just a crazy time of fraud. Nobody went to jail. The DOJ didn't prosecute one person from the finance side who allowed that to happen, to crash markets. Pretty much massive fraud. And so what it comes down to is nobody's coming to save you. We don't have a justice system anymore. We have a legal system. We have a system where after '08, '09 and that debacle happened, it sent signals to the market to pretty much say, if you do crazy stuff, we're sorry about that. We'll have the American taxpayers bail you out. And so that is our landscape we exist in. And so I'm talking to the business owners. I'm talking to people who are looking at finance as a means to an end to secure their families, to secure their livelihoods, to protect themselves. And so on this chart here, if you look, we have a gold historical chart, and this is went out about 20 years. So I was born in '87. You can see gold did kind of some interesting stuff here in the late '70s, right? So this is saying January of '80. So the early part of 1980, gold skyrocketed. And then really it chopped sideways for a long period of time. And then in this year 2000, as we can all remember, we are told that the Twin Towers were attacked and they crashed, and we all saw that. Not only were the Twin Towers crashed, but then we had what's called World Trade Center 7, Building 7, come crashing down wildly. If you ever look into that, it'll send you in a rabbit hole. But what proceeded after that, that was the door. Okay, that was the door that opened up U.S. foreign policy to go all throughout the world, bombing, killing in the pursuit of justice because we were wronged. Well, we proceeded to go into Iraq to, get these weapons of mass destruction simultaneously. Millions and millions of people passed away because of that action, sadly. Destabilized Iraq completely. Saddam Hussein, who we'd given billions of dollars to as a country. I shouldn't say we didn't do it. Our government gave them billions of dollars. Finally, they decided they didn't like the guy and they had to get weapons of mass destruction. Massive debacle. However you want to look at that. Kind of a black mark on our eye showing what we allowed to happen as a zealous people who were just wanting justice. Proceeded by that, then to go into Afghanistan, do more damage. Then we allowed Libya to be toppled. Omar Gaddafi, which was another destabilization effort. So because of our efforts, what you'll see with gold here in this time frame is one of the largest drivers of gold is not inflation. A lot of people have that wrong. It's not necessarily inflation as it is more war and instability and people knowing that gold has preserved its value for thousands of years. If you had a gold coin from Egypt thousands of years ago, that coin would be worth, today it's showing an ounce is worth close to $4,000, 3,800. So gold is just a masterpiece at wealth. In the Bible, in the book of Genesis, it says that gold is good. And that's what God gave to man. It says in Genesis 8 that Abraham was very rich in land, gold, silver, and cattle. So gold is something that has been around forever, since people have been walking and trading. Now, obviously, people bartered and they did things of that nature. But at the end of the day, it is a asset preservation tool. It is not something that you buy to get rich. Obviously, if you can buy it, you're doing well. You're in a savings mode. And so it's an asset class that will actually keep your wealth. So if you've been saving in gold every year, let's say 5, 10, 15%, 20% of your portfolio, if you're eager, home prices have gone up, but so has the price of your gold. Food, gas has gone up, but so has the price of your gold. So it keeps you wealthy. And one of the big tug of wars that I mentioned earlier was Americans aren't taught to own gold. Okay, so let's play that out. So you sit down, let's say you start your company and you start doing well. And you say, "Hey, our business is good. Things are great. We need to start buying assets." Now, a lot of times business owners pour into their companies. They buy more equipment, they hire, they invest their money into their company because they see their company as their long-term wealth driver and creator. Outside of that, a lot of people start to build portfolios. They start to want more wealth and their business is good. So now they say, okay, outside of my business, I need to de-risk myself from my business and start growing wealth outside of my business. So we'll buy real estate. Over here in the real estate chart, our parents were buying houses all in these times. I'm 37, so I'm a millennial. And then go into here, right about the time they start printing a ton of money for these wars and keeping, Alan Greenspan kept interest rates super low after the dot-com crash, which you'll see this little gray piece here is the dot-com crisis. So liquidity and money flooded the markets. Well, if we come over to 2008, what happens to the price of, mind you, there's still a lot of war going on. The price of gold rises. So if you look at this correlation here, this is the financial crisis in 2008-9. Real estate dropped. If you come over here, gold went up. And so if you were a wise investor and saw the bubble coming of the craziness of the real estate market, and you're like, holy moly, in the last 10 years, 5 to 10 years, the price of real estate has skyrocketed. This is not sustainable. Well, then you might have liquidated your real estate and said, I'm getting out. I want to go to a cash position so I could buy more real estate once it comes down. What a lot of people did is they went cash. But what they could have done, they could have gotten from sold their real estate, gone into a cash position, simultaneously purchased gold, and rode gold up from $739 an ounce up to $1,700 an ounce, over 100% return on their money. Simultaneously, if you come here to 2010s, 11s, in this period, we're seeing that real estate was starting to climb up again. So what I'm getting at is you can do double plays. And so when real estate appreciates, you can ride that, be conscientious. Now, whether you're buying real estate for cash flow or appreciation, everybody's different. And so you can cash out on your real estate, get liquid, and then go into gold. And what gold will do is, like in this chart here, gold simultaneously went down. And what happened to real estate? It went up. And then it went up again. This was when Trump was in office here. So gold is a very interesting tool. And the reason most people don't own it is because they're financial advisors. A financial advisor will never make money off of you when you'd make the decision to buy gold or silver. You actually remove money from them that they get to make off of you. And so that is why you most likely don't own any, because here they are wanting to, manage your stocks and manage your portfolio and get you into international markets and blah, blah, blah. And so gold for you is not really an option. Most people who own gold own it because they believe in it. They see the historical trends. They see the protection it applies. They see it's quiet. You can simply own hundreds of thousands of dollars worth of gold in your hand. Nobody knows you have it. You can put it in a class, really high protected. I believe it's like class 2 or 1 vault. And so this is the massive discrepancy we have. Financial advisors want to manage all your money, so they don't want you to own gold. Life insurance agents, who are more on the protection income planning side, they usually don't recommend for you to buy gold because then they can't write life insurance policies. So you're in this tug of war. But at some point, as an investor, as somebody who's smart, can look at markets, can look at historical trends, they will say, I want this. This is real money. Paper is not money. On the top of a $100 US bill Federal Reserve note, it says note. A note is a debt instrument. And I believe it was JP Morgan who famously said, gold is money, everything else is credit. And so am I recommending you to buy gold? Absolutely not. Am I telling you to, get away from your broker or your financial advisor? Absolutely not. All I'm saying is you have to understand it, because nobody's going to understand it for you or teach you about it, because there's conflict of interests. Now, luckily, I get to see a holistic view of wealth building, wealth planning. I get to work with entrepreneurs. And so with that, all asset classes are on the table. Equities, stock market, insurance products, gold, crypto, private money lending, private equity. These are all asset classes that a lot of the wealthy actually look into. So today's video is really about talking to you guys about trying to understand what makes these go up, what makes these go down. And historically, what you see is gold will go down, but then it'll chop sideways and be right back. It goes up, went down, chopped sideways, went up, went down, chopped sideways, now it's back up. So if you can look at these scenarios and time things based on war, time things based on market, market disruptions or chaos, well then I would say people who've understood gold and silver, they will have pretty good paydays as far as their wealth preservation. Most people buy gold and they don't sell it. I'm not against selling gold. I think if you can get exit gold at a high premium, get back into real estate or another asset class, or if the stock market drops, that makes perfect sense to me. So today's video is about getting people to start to understand gold. And there's a really good book here called The New Case for Gold by James Rickards. And it's a really good book to outline why you need to own it. And really, there's a theory out there that I believe in, and it's if you don't own it physically, you don't really own it. So even in the gold world, people will buy the ETFs. They'll buy paper gold. Is that the wisest? I don't know. I don't think so personally, but it's not to say people can't invest into ETFs. So the conversation today is, why don't you own gold? Is it because you don't understand it? Is it because you don't understand the value of it? Is it because you have somebody in your ear telling you to, buy the dip in the stock market? Which may be wise to do. I'm not saying they're wrong by saying that. But if we have a portfolio of 100% of assets, I think even run-of-the-mill financial advisors technically should be saying that 5% or 10% of your portfolio should be allocated to gold. Now, do they actually recommend that with you? No, most of the times they don't. Most of the entrepreneurs I get to work with for tax planning, estate planning, income planning, it's kind of like a foreign thing. They don't get it. They don't understand gold. So I hope today's video will help you to motivate you to start understanding gold. Now, gold is interesting because it's held by all banks. That is their actual reserve. They hold their money in gold. They don't hold it in dollars. They hold and even if you look at nations, and they look at tons of gold and how much they hold. The USA is the number one holder of gold on paper. China has some wishy-washy stuff. They don't disclose technically how much they own. In China, it's illegal to export gold out of the country. And here, in not Arizona, but in the USA, we don't have such things. We also had Nixon in 1972 pretty much closed the gold window. So the world up until that point knew that they could park their gold in the USA and get dollars. And then at any point, they can trade their dollars or their debt most of the time and come and get their gold. Well, what Nixon did was he pretty much told the whole world, hey, that's not possible. We're going to keep that. You can't redeem your debt for our gold. And so that sent confidence throughout the world of, hey, something's happening in the US. Their funny money system is being weird. It's being really funny. We should probably hold our own gold, things of that nature. So there's been warfare with it. There's been manipulation. But at the end of the day, as an entrepreneur, providing for your home, providing for your family, and long-term generational wealth, I firmly believe that gold has to start entering your conversation. You have to start studying why is it strong. Most people do that with the stock market. They understand real estate, commercial real estate, and they look at those things as valuable assets. And I encourage you in watching this video today to start looking at historical charts. Potentially start following people on YouTube about gold. Now, for a long time, the gold guys were saying it's going to go up, it's going to go up, it's going to go up, and astronomical numbers, $10,000 an ounce, $20,000 an ounce if they do it right, with the debt ratio. And I'm not saying they're wrong, but a lot of people got into gold years and years and years ago. For instance, in this chart, they got into gold and it was just doing sideways stuff, not super crazy. But if you look here, right now, those who have gold have doubled their money, 100% return on their money. And this is in year 2024. So from $2,000 up to $4,000, those who are gold owners have doubled their value. Now it's interesting, right? Because their gold doesn't get any bigger. It's just that their dollars that they hold are getting less value. So when you go to Costco and buy, I was in there yesterday and spent $700 between food and fuel. 2 or 3 years ago, I would have got that same amount of stuff for probably about $450. So it's not like the mayonnaise jar got any smaller or a gallon of fuel got any smaller. Our dollar is getting weaker. And that's what they do with inflation, with war, with money printing, increasing base money supply. And so if you want to fight that system and you want your wealth, your material wealth to actually go up over time, you need those assets that protect you. So let's take a quick peek at a big mining company. Let's look at their shares. Let's look at what they've done. And they have gone up and down with the price of gold historically. So let's look at this. $7. Now it's almost $86. Now, this is obviously the most recent. So let's get into the last 3 months of Newmont Mining or Newmont Corporation. The asset class is going up. How much more? Does it go up? Does it break all-time highs? So this was in 2022 when the stock market crashed down here, right? Or was this the stock market crash? Let me go back a little more. to 2020. Stock market crashed, and look what happened to the price of gold. It went up and almost doubled from mid 30s up to high 70s. Chopped sideways, came down, and then now it's spiking way back up. So is Newmont's stock going to break into an all-time high of, be up here over 120 bucks, 110 bucks? I don't know. Obviously the mining companies are a little more risky than the physical, but over time, these mining companies have really good returns if you invest in the right ones that are big. The smaller mining companies are more speculative. It's not necessarily investing, it's more speculation. But you always decrease your risk of investing in things by increasing your understanding. Not to say there's still not principal risk and geopolitical issues and politicians and stuff with investing in mines in other countries. But as a whole, gold is an asset that I believe everybody who is serious about building wealth, protecting their families, needs to start to understand. I encourage you to start the study, start stacking over a long period of time, not just this year because you get a boost of energy, but every year it makes sense. You should be acquiring gold into your portfolio. Silver is just as good as gold, and some argue that silver coins are actually better. So silver is a very interesting asset. It's very heavy. It's got a very pure sound to it. And silver, this is a silver coin that was for year 1987, the year I was born. Now, this is a 1 troy ounce of silver. So let's take a look in the chart at what this silver coin has done over time. So let's go to charts. Let's go to silver price chart. Let's go back 30 years. Let's go back to all. 1987, where are we at? 1987. This is in November of 87. So this little coin was $7 when I was born. Somebody could have purchased that for $7 and about 70 cents. After that period, it looks like it dropped down to about $4 an ounce, chopped sideways boringly. Year 2000, up to $5, $4. And then we have our wars starting, massive amounts. And so now we see it up into year 2008. This little coin is now almost $20. Drops down, still holding, goes up to a high of $42 from $7 when I was born, followed by more money printing, more assets into the stock market, more assets into real estate. We have our crash in the stock market in 20, goes from $15 an ounce up to $30 an ounce, chopping sideways. And now it appears to be on a parabolic move up to $46 an ounce today. $7 from the year I was born to $46 today. That is wealth preservation. So when gold is brought to the surface and mined and refined and poured into coins, gold usually stays. It doesn't get converted into much technology. It stays on top in either jewelry or coins or bars. Now, silver, when silver gets mined, it gets used. The AI revolution that's going on right now with, chip companies, with EVs, batteries, technology, all technology requires silver. So it not only gets mined, but then it gets pumped into stuff and kind of lost into the technology, into the cars. And so that supply is diminishing, opposed to gold, like I mentioned, that kind of stays. So definitely worth looking into. I encourage you. Today's video is to have a different view of what real money is versus what credit is. Now, mind you, this is the most important thing. The reason we came off the gold standard was because at the end of the day, we had too much debt and we couldn't pay back all the people we owed. Imagine if tons of people, you owe them money, and then they have these certificates where they can come and change their certificates in, and you can have to give them their gold back. At the end of the day, we probably didn't have what we needed to give them. I'm not a massive history guy, exactly why that happened. But when you have a fiat debt-based banking system, you have to hurt the dollar, which everybody's saving in. So if you're saving in retirement for these dollars, and every year you're losing value at Costco and college and utilities are rising, remember, the thing to help you stabilize long term, which gold has shown us historically with these charts, is gold and silver coins. So little kind of a boring topic if this isn't something that you're used to, probably wanting more fast money with crypto and futures trading. Not really what I'm discussing today. Today is about anchoring your wealth to an asset that over time has taken care of a lot of families. And I hope you found this video to give you a new perspective, and hopefully you start the conversation with your advisor, with somebody who knows about gold, and you start stacking for your family long term. Have an amazing day.